A good late afternoon and thanks for joining us. I'm Sage. You're watching Kalkine TV live from Sydney, and this is the last show of the day, the last trade, and there's no better way to wind down the day than with the latest market close commentary. So in today's show, we'll look at the overall ASX 200's performance of the day and explore the gainers and the losers. And this will be followed by the shares that grabbed the limelight today, such as Bank of Queensland, Pact Group, Challenger and many more. Then I'll share the trending updates from the Asian and global markets as well. And finally, in the last segment, we have a special report on cryptocurrencies. So what are we waiting for? Let's get started. And in its Global Financial Stability Report released yesterday, the International Monetary Fund highlighted three challenging transitions for the global economy: the COVID-19 pandemic, climate change and cryptocurrencies. Interestingly, these are the macro factors impacting global share markets majorly in the past few months. And the IMF has also lowered its Australian growth forecast for this year to 3.5% from 5.3% projected earlier. On top of that, the Scott Morrison-led government has slashed its economic outlook for the September quarter. Now the gross domestic product is expected to drop by 3% or more in 2021, up from the previous guidance of 2% or more. And besides, Victoria's daily cases surged to 1,571, while 13 deaths were sadly reported earlier today. This is the highest single-day death toll reported in the current pandemic outbreak since June. And meanwhile, the next phase of eased restrictions and vaccination targets may soon be revealed. On a brighter note, the IMF does expect the Australian economy to rebound strongly in 2022. And let us now understand the stance at the local bourse today. The ASX 200 closed lower today, dropping 0.11%. And over the last 5 days, the index has gained 0.92% and is currently 4.72% off its 52-week high. On the sectoral front, 9 of 11 sectors were higher today, barring financials and materials. A-REITs was the best performing sector, gaining 1.6% and 1.1% for the past 5 days. And now let's take a look at the top gainers and losers of the day. The top performer on the ASX pack was the A2 Milk Company, up 13%. GUD saw its shares rise by 8.5% on the back of its quarterly update that was released yesterday. The Star Entertainment Group and New Farm were up as well, 5.9% and 5.8% respectively. Shares of online retailer Kogan.com also rose by 5.5%. On the flip side, material companies ruled the red zone of the ASX today. The biggest laggard was mining giant Fortescue Metals Group, down 5.2%. And some of the other top laggards were mineral resources, Rio Tinto and Champion Iron. Shares of Bank of Queensland plummeted by 4.3% following the release of its 2021 financial year results. And let us now shift our focus to the stocks that fetched the investors' attention today. Beginning with the Bank of Queensland, who has extended its losses and traded down 5% following the release of its 2021 financial year results. Cash earnings of 412 million Australian dollars increased 83% in 2021. The board has determined to pay a final fully franked dividend of 22 cents per share, bringing the 2021 dividend to 39 cents per share. GUD Holdings traded 8% higher on the back of its quarterly update that was released yesterday. And notably, the company's automotive division is seeing revenue growth, and its Davey water products and export businesses are experiencing strong demand. Continuing the earnings release spree, Bubs Australia surged over 25% after reporting a recovery in sales during the first quarter. And the total revenue gross nearly doubled at 18.5 million Australian dollars, overcoming the COVID-19 disruptions and challenging macro environment. International gross revenue also increased by 489% on the prior year. And the momentum and ability to enter new markets continues to advance in New Zealand, China and North America for the goat milk and infant formula maker. The next news covers a gold mining and exploration company, Gascoyne Resources. It wrote to shareholders telling them to reject a recent unsolicited bid from West Gold that implies an enterprise value of 88.8 million Australian dollars for Gascoyne. While the bidder's statement has not yet been lodged, it looks like Westgold will only buy Gascoyne if it does not proceed with the plan to merge with Firefly, and shares plummeted by over 9% today. And we'll just take a small break now, but do stay tuned with me. I'll be back with more trending market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back, Sage here with the market closing commentary for Kalkine TV. And let us now take a look at more of those stocks that grabbed the investors' attention today. And Electro Optic Systems Holdings saw its shares rise by as much as 8% after a trading pause. And the defence, space and communications company announced that its US subsidiary SpaceLink Corp has selected German firm OHB Systems to manufacture 4 satellites, with a deal expected to be signed next week. OHB will invest US $25 million into SpaceLink. And uranium has been one of the hot plays over the last year, and maybe that's why shares of Paladin Energy rose by over 20%. And it looks like the current energy crisis might be helping stocks like this. And let's move on to the next. Southern Cross Media Group shares rose by 1% today after the company told shareholders that audio revenues in the September quarter grew by 15% year on year as advertising markets recover from the pandemic. The reopening of New South Wales this week and the planned reopening of Victoria later this month has stimulated advertising activity. And shares of Pact Group Holdings tumbled by over 12% today after it seized the sales process of its contract manufacturing businesses, citing pandemic-related supply chain disruptions. The division was suffering weaker demand and lower margins due to higher input costs. Other businesses are dealing with the higher raw material and international freight costs, and Pact Group added. And the next update comes in from IDT Australia, whose shares marginally rose after local pharmaceuticals manufacturer confirmed that it has entered an agreement with Monash Institute of Pharmaceutical Sciences to make Monash Uni's mRNA COVID-19 vaccine for clinical trials. An IDT bagged a sterile manufacturing licence from the Therapeutic Goods Administration last month so it could make the products for clinical trials. And the last update in this segment is coming from investment firm Challenger, who reported that its assets under management has increased by 3% in the first quarter of the 2022 financial year amid strong annuities sales. It also reported net flows of $1.4 billion to the fund's management business. Shares, however, traded in the red today. And now that we know what the stance is here at home, let us move on to our next segment and understand the Asian and global market performance. And the global forecast for the Asian markets remains gloomy, with interest rate concerns offset by support from the crude oil prices. The European markets have been mostly higher and the US bourses are down. One could say that the Asian markets are having a hard time to figure the difference. And Asian stocks were mixed today. Shares in Japan and China posted modest losses as Japan's Topix index shed 0.2% and China's Shanghai Composite Index fell 0.6%. On the other side, South Korea's market rose amid a strong jobs report, the Kospi Index adding 1%. In Hong Kong, a storm led to the cancellation of the morning trading. And beyond Asia, stocks wobbled on Wall Street overnight as traders wait for more data on inflation and corporate earnings this week. The S&P 500 closed 0.2% lower, the Dow Jones dropped 0.3%, while Nasdaq declined 0.1%. And global markets are struggling to shake off worries that inflation spurred by an energy crunch and pandemic-related supply chain snarls will sap company profits and economic expansion. On top of all this, the debt crisis at China Evergrande Group continues to simmer. And besides, the International Monetary Fund has warned of the risk of sudden and steep declines in the global equity prices. And we've reached the last segment of the show. Let's take a quick look now at the buzzing crypto market's performance. And in its semi-annual Global Financial Stability Report, the International Monetary Fund stated that the adoption of cryptocurrency as national currency has significant risks and is an inadvisable shortcut. Time will tell if, along with the IMF, others are also worried about the cryptoisation of the developing world. And meanwhile, Bitcoin's price dipped below US $57,000, and comments from JP Morgan's CEO Jamie Dimon, who stated that governments will regulate Bitcoin, also might have soured the crypto sentiment. On the other side, there is speculation that the US Securities and Exchange Commission will finally approve a Bitcoin exchange-traded fund. In the crypto, it will be interesting to see if increasing transaction activity on the Bitcoin blockchain could point to fresh buying demand this quarter, or will comments like the one from the IMF recently adversely impact the digital currencies. And thanks for joining us in the report, but that's a wrap, folks, and hope you found the market closing commentary informative. We'll be back tomorrow live from Sydney at 9:30 in the morning for our first report on the pre-market scenario. Till then, take care and stay safe. Sage signing off.